Hi there, welcome to the Alpha Wave Trader week ahead. First of all, I thought I'd recap on what I was saying last week about oil prices and then have a quick look at the S&P 500, which has had quite a big move over the last week and is quite an interesting setup. So having a look at the oil price and what we were saying last week about it, I was telling you that I reckoned we were in for a bit of a sell-off in oil prices, and you can see there a few days after the video I made, we've had the biggest sell-off in oil in over 4 years, which I think is a pretty good example of the theory I've been showing you over this last few months, showing you how these sell pivots are so important, and you need to keep an eye on them and how they can create good opportunities. And this is actually the daily chart. If we go into the weekly quickly, it will give you a sense of what I was actually saying to you last week. I was showing you the fact that we'd had a second weekly sell pivot after this initial sell-off and the reaction. We were seeing the second weekly sell pivot, which to me was quite interesting. My expectations were, and prices were quite low at the time when I did the video last week, and I said, look, it could rally up into the guts of that sell pivot candle before finding the selling pressure, which is pretty much what happened. And I was saying, there's areas within that sell pivot candle which can give you better entry prices, and I needed to see a close above the top of the sell pivot candle to change my bearish point of view. So if you were entering positions, your risk needs to take into account the fact that you're not wrong until you get that weekly close above that weekly sell pivot candle. And so you can see that prices have sold off to the bottom of that weekly sell pivot candle, and that is often a target for me on trades. But now that we have seen this weakness, I wouldn't be surprised to see this low near $50 threatened over the next month or so. And who knows what would happen once prices bust below that level around 42, and that would usually take some time. So you might even get a rally from here, and it often takes quite a long time to really play out. But things are now pretty well set up, and there's no need to get bullish on oil until you do see that weekly close above around $61 on WTI crude. So that was a great little case study for you there last week. So moving on to the S&P 500, this is actually the futures on the S&P 500, the E-mini S&P 500 futures. After last week with the Fed disappointing the market somewhat by saying they're not going to be lowering rates aggressively, and Trump throwing down the gauntlet to the Chinese, we've really had a double whammy on the market at all-time highs. And I've talked about these distributions in price and where the key points are where you can look for reversals. And what we've seen last week is really a great example of some of the things I look for. And you'll see we've got this reaction in the trend. We had this initial wave up in 2016, 2017, and since then we've been really in a trading range. And the way I analyze these things is to look at that initial wave, which is the pullback, and then I make calculations off that wave and analyze future price action based on that. And the key level is, of course, the midpoint, which is the point of control of the whole thing. And you can think about that as sort of a gravitational point where most of the trading is happening. and the market just gravitates back to that point, shaking people out of positions, and before deciding where it really wants to go. So you can see the way this is developed. I have the level 25% outside that range and 618 outside that range, both above and below. And they are key levels where the market often reverses from, having false breaks of the range. So you can see there on the first attempt, the market rallied to the level of around 25% above that initial pullback. So that's where you get people getting bullish and getting long, and people who were bearish and got short in this area, their stop losses are up in this zone as well. So they all got stopped out. And then we've had a false break of the top of the range. And we've seen a move, back to the point of control. And this is the thing that you see over and over again, is this move back to the point of control. And I have the areas within the range that are very important, that 12.5 to 25% and the 75 to 87%. So those two areas are the key zones where reversals often happen from. And you can see we've had multiple times within that range where prices have reversed in the buy and sell zone within the range to head back to the point of control. But looking beyond that range, again, the level 618 below, when the market really collapsed at the end of last year, the bounce occurred from that point, pretty much exactly 618 below the range. And there's very often you see reversals from that area. And then we've had the weekly buy pivot from there, which is with prices closing above the high of the lowest price candle, and off it went to the upside, hitting that point of control again, and following it along, there we go, a rally up to that level 25% above, hitting it exactly, and the sell-off began again, a weekly sell pivot and a big sell-off, reaching just above that point of control. Such an important level to understand. And then it's taken off to the upside again. And here, in this area, again, lots of stop losses going off for all the people who are getting short in this zone. So we've had another big wave of stop losses. And this area is just so important, that 25% to 618 above that initial wave reaction within the uptrend. And this is the area where reversals can happen, and often do, as you saw in this example here. So now that we've seen another weekly sell pivot, you can see there. So that weekly sell pivot being a close on a weekly basis below the low of the highest price candle. So the highest price candle being from last week, and the weekly close below the low of that candle, creating the weekly sell pivot. And it's also created a false break of the high from last year, from early 2019 and last year. So we're seeing a false break, which can lead to, again, that move back towards the point of control around 2700. So from here, as I was saying in oil last week, you can expect to see the attempted rally, but now that the writing's on the wall, I'm looking at any rally as a potential selling opportunity. And a weekly close, above that high, you're out. So, you've got a pretty determined size of risk, and you've got quite a large expectation of where the S&P can get to initially. And from there, look, who knows? You know, depending on how growth goes and what happens, there's no reason why this can't be the beginning of a much larger move. I won't necessarily predict that now, but the point being, if you can capture, you know, a sizable move to the downside and set yourself up in a free carried position where your, you know, break even level is above the all-time highs in the market, it's a very strong position to be in to see what comes next. If the market's going to be bullish, as we analyse these things in the past, you'd be looking at the point which is the buy zone of this most recent wave as the point where we could expect potential reversal if the market is very bullish. So you can see the wave here. We've had that wave to the upside. Then that area there is where it could find support and turn back up, and the trend to the upside could continue. So from that point of view, as far as strategy, you know, you're looking to enter at the best possible point on any rally from here on a potential short position, and you know, you'd be wanting to take some profit on the way down, because that's, I mean, that's a long way down. So you'd be taking some profit on the way at a point where it's at risk of turning back up based on an analysis of what the uptrend could look like. But tell you what, if prices can't hold above that previous low from a few months ago, then yeah, watch out. This market could really come into trouble if that point of control around 2700 can't hold. But that's a story for another day. So let's now follow this along for the next few weeks and see how it pans out. All right, cheers. I'll come back with more next week.